On board Bikash Prasad, the Group CFO at UPL, and talk about how fabulous their quarter has been. Bikash, hi. Thanks for waiting by. Good to have you on ET now. Bikash, 7 consecutive quarters of growth now, and you've swung back to profit this quarter. Tell me what exactly transpired in the quarter gone by and what really contributed to this kind of a move.
Thanks for having me here today. And it has been a very strong first quarter. As you recall, this is our 7th consecutive quarter of our revenue growth and EBITDA growth. But more importantly, it's also our 7th consecutive quarter of our contribution margin growth, our EBITDA margin growth. So it's not just about the absolute number that we are improving, but we are improving the quality of the business in terms of the inherent margins in the business. So this first quarter, despite all the uncertainty and challenges, we had a West Asia crisis, we had a deficient monsoon in India, we had heat waves in Europe, we had a drought in Australia, and El Nino related many other impacts we had it at the group level. And we had discussed it earlier that we are a very globally diversified company with our presence in over 140 countries, diversified on customers basis, on product, on manufacturing capacities, on R&D. So we are able to navigate it much better than anybody else. Coming back to the first quarter, usually first quarter is a very soft quarter for us considering the seasonality in the agri crops that we have. About 18 to 19% of our revenue or of our full year revenue comes in the first quarter, and all the other period cost will flow into the P&L, and hence at the net income level you will see that net income is usually negative. But because of our focus on continuing improving our margins, this quarter we have recorded revenue growth of 10%, which is extremely comfortable and very happy with the revenue growth. Our contribution margin further elevated to 14.2%, a jump of about 180 basis points. Our EBITDA margin improved by 60 basis points, and all these initiatives and actions led to improve our net income or PATMI by over 100 crores. So we are very satisfied with our performance on the P&L. On the balance sheet also, if you look at it, we had over the last 2 years with planned actions, we have been reducing our debt, we have been improving our gearing ratio.
Right.
So this quarter as well, we have further improved our gearing ratio from 2.6x to 2.4 times. Although year end the last year was at 1.6 times. Again, considering the seasonality, first quarter usually we'll see that our working capital and hence the net goes up by $800 to $900 million. And the Q2 again further goes up by $500 to $600 million. Q3 remains flat in terms of the net debt and working capital. And Q4, the release of working capital and cash happens. So
Understood.
we are in line.
Right. You know, Bikash, all these numbers that you're talking about and how you're describing what the quarter gone by was, it really gets me to your FY27 guidance of 7 to 11% on the top line and 10 to 14% of the EBITDA. Q1 is already showing double-digit growth on both counts. So is there room to further upgrade your guidance, or would you say there are specific reasons for caution in the remaining 9 months?
Yeah, I'm sure that there is a caution now. Still, the war has resumed. We do not know how it will pan out. The full impact of El Nino still we have to understand and see how it pans out. So it has been a cautious guidance that we have given to the market. If you look at the last year, FY26 guidance, we had guided the market for revenue between 4 to 8% of growth. We ended up at 11% of the growth. We had guided the market revenue growth of 10 to 14% initial guidance, which was upgraded to 12 to 16%, and eventually we delivered 18%. So I think the businesses are good. All the platforms are doing very, very well. But we have been cautious considering the macros and weather-related uncertainties.
And what about your full year guidance, 10 to 14%? Are you okay? Just with regard to how you're placed versus how you've done in Q1, give us a perspective as to how it will play out for full year.
Yeah, so this quarter is 15% EBITDA growth that we have reported. Our guidance we have given is 10 to 14%. In the first quarter, we also had some tailwinds of FX because compared to Q1 of last year, FX had devalued and that we had some positive impact on EBITDA as well as on the net income. When we give a guidance for the rest of the year, we do not consider the impact of FX, and hence for the remaining quarters, we look at it in terms of the constant currency, and that is considered in our guidance.
So FX will just be an additional tailwind, right, to the guidance number that you've given of 10 to 14%. Is that the right way to think of it?
Difficult to predict whether it will be a tailwind or it will be a headwind, that we do not know. Yeah, but yes, has not been factored in while giving the guidance.
Sure. And with regard to raw material pricing and margins, how are those shaping up for you? If you can give us a perspective on that as well.
Yeah, I think in most of the markets we are seeing that there's a cost pass-through happening. So even first quarter, if you look at our commentary and the numbers that we have shared, we have seen in Europe we are able to pass through the cost impact. APAC region also price variance has been positive. America also has been positive. India has been positive. Basically in Brazil and other LATAM countries, where the season is mainly Q3 and Q4 for us. As of now, we have seen some resistance in terms of the pass-through. Also, it's a factor of the market, and other competitors are also having inventory cover. So we have not seen that the market is doing a price adjustment, and hence in those markets we have not seen any cost pass-through.
Vikash, great to have you today on ET Now, and thanks for joining in with all that insight.
Thank you so much.